Welcome to my channel. World Scene News. Subscribe to my channel for news updates all around the world. A new wave of anxiety is sweeping through Wall Street, and it's not just the usual market jitters. This time, the unease is rooted in a technological shift that could reshape the global financial landscape. Investors, analysts, and executives are all on edge, sensing that something big is brewing beneath the surface. The source of this tension? China's surging tech sector, which is rapidly evolving from a follower to a formidable innovator. Once seen as a distant competitor, China is now at the forefront of a technological revolution that's sending shockwaves through the heart of American finance. For years, Nvidia reigned supreme in AI chips, powering everything from video games to advanced AI models. Its dominance seemed unassailable, with its cutting-edge hardware setting the pace for the entire industry. Wall Street treated Nvidia as a safe bet, a pillar of the new digital economy. But now Chinese tech giants are mounting a direct challenge, threatening to upend the global order. These companies are not just catching up, they're innovating at breakneck speed, determined to carve out their own place at the top of the tech hierarchy. This isn't just about faster chips, it's about China building a parallel tech ecosystem, designed to break free from American dominance. The stakes are enormous, as both countries race to control the future of artificial intelligence, cloud computing, and next-generation hardware. Companies like Kunlunxin and More Threads are leading the charge, signaling the end of Western-led tech supremacy. Their rapid progress is a wake-up call, showing that the balance of power in global technology is shifting faster than anyone expected. Investors who once saw Nvidia as untouchable are now watching the East, worried their portfolios could be shaken. The old certainties are fading, replaced by a sense of vulnerability and the need to rethink long-held assumptions about tech leadership. Nvidia's reliance on the Chinese market, once a strength, now looks like a vulnerability. As Chinese competitors gain ground, the company's future, in its most important overseas market, is suddenly in question. As China nurtures its own champions and closes its market to outsiders, Nvidia's financials are showing early signs of strain. The company faces not just competition, but the possibility of being locked out of a market it helped build. Some see risk, others see opportunity. The scale of China's market and its drive for tech self-sufficiency are irresistible. For global investors, the challenge is to navigate this new landscape, where old rules no longer apply and new winners are emerging. The question is no longer if China will rival Nvidia, but how soon, and how big, the shockwaves will be. The countdown has begun, and the world is watching to see who will come out on top in this high-stakes tech rivalry. The global tech industry is holding its breath, bracing for the next seismic shift, a transformation that could redefine not just markets, but the very future of technology itself. At the center of China's tech surge are Kunlunxin and More Threads, two companies with very different strategies, but a shared goal: semiconductor supremacy. Kunlunxin, spun out of Baidu, leverages deep integration and a ready-made customer base in China's cloud infrastructure. More Threads, founded by a former Nvidia executive, is building not just hardware, but a rival software ecosystem to Nvidia's CUDA. Together, they form a pincer movement. Kunlunxin dominates inference chips for AI applications, while More Threads focuses on foundational technology and rapid innovation. More Threads' Musa platform is a rallying cry for Chinese developers to build on homegrown standards. With annual GPU releases and state backing, these companies are closing the gap with Nvidia at breakneck speed. Wall Street is only beginning to grasp the scale of this multi-pronged threat. Wall Street's fear is visible in the numbers. Markets are jittery, and the old guard is watching nervously as the ground shifts beneath their feet. In China, a wave of blockbuster chip IPOs is rewriting the rules and setting new records, sending shockwaves through global markets and dramatically shifting investor sentiment. More Threads IPO stunned the world, raising over $1 billion and sending shares skyrocketing nearly 470% on debut, a euphoric endorsement of China's tech ambitions and a clear signal that global investors are taking notice. Meanwhile, Kunlunxin's highly anticipated IPO has already sent Baidu's stocks surging as investors scramble to gain exposure to what many see as the future of China's AI hardware sector. Analysts from global giants like Goldman Sachs and Macquarie are racing to upgrade their ratings, betting big on these new champions and fueling a frenzy of speculation and optimism. Kunlunxin's valuation now rivals a third of Baidu's entire market cap, with revenue projected to double in just a year, an astonishing pace that's turning heads across the financial world. These aren't just startups, they're rapidly becoming future global powerhouses, with the resources and ambition to challenge the world's biggest tech players. Wall Street is rattled by the sheer speed and scale of capital, confidence and momentum now shifting toward Nvidia's new Chinese rivals, forcing a major rethink of global tech leadership. The numbers tell a powerful story. China's chip champions are here, they're growing fast, and they show no signs of slowing down as they reshape the industry. The market is bracing for a new era of fierce competition, where the balance of power in global technology could shift in ways we've never seen before. The rise of Kunlunxin and more threads is no accident. It's the result of escalating US-China tech tensions. As the rivalry between the world's two largest economies intensified, technology became the new battleground, with semiconductors at the heart of the conflict. US export controls aimed at slowing China's progress instead fueled a domestic chip boom. American restrictions on advanced chip technology, once seen as a way to maintain an edge, ended up sparking a wave of innovation and investment within China's borders. Restrictions on Nvidia's chip sales pushed China to make semiconductor independence a national priority. Suddenly, Chinese engineers and entrepreneurs were racing to fill the gap, determined to build a homegrown supply chain from the ground up. China responded by limiting Nvidia imports and creating a protected market for its own champions. This move not only shielded local companies from foreign competition, but also gave them the breathing room to innovate and grow. State-owned enterprises were directed to buy Chinese, giving local firms a captive market and real-world testing grounds. These policies ensured that domestic chip makers had both the demand and the resources to rapidly improve their products. While Nvidia navigated export controls, Chinese rivals signed massive deals and scaled rapidly. The government's support, combined with a surge of private investment, allowed these companies to expand their capabilities at an unprecedented pace. The result, a self-sufficient Great Wall of Silicon, accelerating innovation and attracting huge domestic investment. China's tech ecosystem is now more robust and interconnected than ever before, with new startups and established giants working side by side. Alliances like the Model Chips Ecosystem Innovation Alliance are standardizing homegrown AI processors. These collaborations are setting new benchmarks for performance and compatibility, ensuring that Chinese chips can compete globally. The US-China tech war, meant to slow China, has instead supercharged its chip industry. What was intended as a barrier has become a catalyst, driving unprecedented growth and ambition in China's semiconductor sector. Geopolitics has redrawn the map of global tech competition, creating new power centers and shifting the balance of innovation. The world is now watching as China's chip industry steps onto the global stage, ready to challenge the old order. Kunlunxin's transformation from Baidu project to $16.5 billion market darling is a masterclass in strategy. Developed and tested within Baidu's massive cloud, Kunlunxin had a guaranteed first customer and a perfect launchpad. Its breakthrough came with a major China Mobile contract, sending Baidu's stock soaring and signaling government support. The upcoming Hong Kong IPO will give Kunlunxin autonomy and capital, while Baidu retains a controlling stake. With revenue set to double and dominance in inference chips, Kunlunxin is now a cornerstone of China's AI infrastructure. Its focus on inference, where AI meets real-world applications, has made it indispensable. Wall Street can no longer ignore this rising giant. While Kunlunxin scales the market, more threads is targeting Nvidia's real stronghold, the CUDA software ecosystem. CUDA has locked developers into Nvidia's world for years, making switching costly and complex. More threads, led by a former Nvidia exec, is building Musa, a homegrown alternative designed to free Chinese developers from American software. Its latest GPU architecture supports AI models with trillions of parameters, matching global leaders. With a new GPU every year and a blockbuster IPO, more threads is closing the gap fast. If Musa becomes China's standard, Nvidia's hardware could become irrelevant in the world's largest internet market. More threads isn't just selling chips, it's building a new technological nation-state. Its success could permanently shift the global balance of AI power. The software war is just beginning. The battle between Nvidia and its Chinese challengers is a high-stakes geopolitical showdown. Nvidia has a technological lead, a global brand, and the CUDA moat, but faces growing barriers in China. Chinese rivals have state backing, a protected market, and guaranteed contracts from state-owned giants. Their challenge: catch up technologically and overcome global supply chain hurdles. Nvidia's challenge: adapt to a world where access to China is no longer assured, and its software dominance is under siege. The Model Chips Alliance and government support give Chinese firms a unified push. For Nvidia, China's market has shifted from strength to vulnerability. For Kunlunxin and more Threads, the race is to close the tech gap before global restrictions bite. The outcome will reshape the global tech landscape. The race is on, and the stakes couldn't be higher. The global capital tide is turning. Wall Street giants like Vanguard and BlackRock are ramping up investments in Chinese tech. The old belief that American tech is unassailable is fading, replaced by a rush to capture China's explosive growth. Chinese tech stocks are surging, with global investors fueling the rally. JP Morgan has upgraded China to overweight, calling its equities essential for growth portfolios. This capital influx gives China's chip champions the resources to innovate, hire top talent, and expand rapidly. For Nvidia, the shift is alarming. New rivals are flush with cash, while its own financials show signs of strain. As capital flows east, Silicon Valley's long-held advantage erodes. The competition is now for both market share and the investment that drives innovation. The financial center of gravity in tech is moving, and fast. The rise of Kunlunxin and more Threads marks the dawn of a new multipolar tech era. The days of American tech hegemony are over. Regional competition and parallel innovation paths are the new normal. Nvidia faces shrinking market share and pricing pressure in China, while new software ecosystems threaten its relevance. Two distinct AI stacks may emerge, one American, one Chinese, creating both challenges and fierce innovation. Falling hardware prices and democratized AI access could accelerate global adoption. China's chip surge is a lesson in digital sovereignty and the power of national strategy. Wall Street's fear is justified. The rules of the game have changed. The world is watching as the future of technology is rewritten in real time.